Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining us live from the market site in Times Square, New York City, we have Phil Mackintosh, chief economist at Nasdaq. We are going to take a look at the housing market in the face of rising rates. Phil, always a hot topic for us on Trade Talks. And before we get into that, let's just get a market review and see where we are right now in the face of rising rates.
I mean, it's kind of surprising because rates are going up pretty quick ever since the Fed decided it was actually going to officially change their policy and start to raise rates. But the stock market's been doing okay as well. So the last 2 weeks, the market's up quite strongly. And rates, if we look back only 3 months, the 10-year rate has gone up by a whole 100 basis points or percent. It was 1.5% just before the start of the new year. Now it got above 2.5% earlier this week. So rates are moving very quickly. Stocks are still holding up.
Yeah, it really is amazing to see what stocks have done in the past couple of weeks when we know that there are more issues than just rising rates. Let's take a look at 10-year yields and mortgage rates because we can see that correlation in how they move together. Yeah,
so we just talked about the 10-year rates. The mortgage rates are actually going up even faster. And so right now the mortgage rates are at about 4.7% on a typical loan. That's 1.2% higher than it was 3 months ago. So that's going to increase the cost of mortgages for anybody that's looking at a house. And the reason that's important is because the prices of houses are also going up really quickly. So the last 12 months, we've seen 15% increase in house prices. You sort of do the math. You've got a more expensive house, that's a bigger loan. Now interest rates are going up, that's a bigger mortgage payment. It's going to be harder for people to keep affording houses going forward.
I guess the question is, why are housing prices still rising? And at some point, will there be demand destruction in the housing market? I mean, it gets to a point where you can only afford so much.
Yeah, so one of the arguments right now is there is a supply shortage of houses. People haven't been building enough in the last few years. And a lot of people are moving out of the cities to the suburbs. So there's just not enough houses available for people to buy. And so that's sort of a supply squeeze. But obviously we all have a lot of stimulus checks that people are spending and pretty low rates. And so that's helping support the prices of houses as well.
Would higher mortgage costs accelerate a move to a recession?
I think that's the main thing people are starting to worry about is, with rates going up, the whole point of raising rates is to slow the economy. And the reason we decided to look today at what's going on in the household space is because that's a big impact on the housing and just the household sector is that a lot of their money is going to go into mortgages. And so it should slow down buying new houses, which should slow down the household sector and also the building sector. But when you look at the credit exposures, since the last time we had a housing cycle peak in 2007, households have delevered a lot. So not only do we have a lot lower rates to start with now, but we've also got much less leverage in the household sector. So it's not looking like it was 2007 all over again. There's a lot less leverage in the household sector, and there's actually less leverage in the corporate sector as well. So the interest cover on the corporates is also relatively low.
So that seems like a good thing. It seems like we might have learned some financial lessons there. And, corporate balance sheets, to your point, certainly look much better. Consumers, if they're paying off their debt and saving more, in theory, that's a good thing. It might not be so great for spend, but it's good for the household.
And it should be better for the Fed trying to get their soft landing because at least the household sector shouldn't cause a recession like it did back in 2007.
Let's hope not. We have a lot of things in the fire right now. Phil, appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq.